Hello, thank you for taking the time to watch this video. Welcome to the second DRAT trade review of the year. My name is OP and I'll be your review guide for today. First of all, before we go into our review, I would like to say happy MLK Day. And with today being the MLK Day, I would like to also invoke the late MLK. I have a dream. We all have dreams, and most of our dreams relate to financial freedom. Dreaming of financial freedom is one thing. Putting steps in place that will allow you to reach your idea of financial freedom is the only thing you should concentrate on. What financial freedom means to you can differ from what it means to somebody else. This doesn't mean that either of you is right or wrong. It is about your interpretation of the idea and working towards your financial goals. Taking the time to plan your financial future is very important. Investing is an ideal starting point to financial freedom. Knowing there are different interpretations of this concept is very important also. Following the statement that best describes you is your first step in financial freedom. Firstly, do you want to be debt-free? Also, do you want to earn passive income that covers all your expenses? The second idea of earning passive income, which will enable you not to need to work in the sense of what is a normal job for me, is the first step to realizing my dream and also a huge leap to making sure I do not owe money to anybody. At Dalstradamus, our motto still remains, cash is your trading asset. Manage it wisely. We believe every investor should understand the risk of an investment before taking a position in that investment. Creating a passive income that is able to support you is really an ideal, and it is more focused on those individuals that are willing to head down the path of self-employment. Trading and investing is a nice way to head down the path of self-employment. Therefore, if you're looking to live a financially free life, then you need to start making plans now. Create those financial goals that will allow you to live the life you want. Don't think that you have time to act. The quicker that you act and start making and sticking to your plan, the better off you will be financially, now and in the future. Now, let's get into our trade review of the week. Before we get into today's trade review, I would like to do a quick recap on SPY as part of the indexes we covered last week. In the last review, we covered SPY, QQQ, and IWM. For more details on last week's trade review, please review our video using the link below this video or in the video description section of the YouTube page. SPY closed at 466.09 last week before we did the trade review. In the last trade review, we did state that we're looking at SPY to move below 464, which was last week's low, and we could see SPY moving down as low as 452, referencing back to December week 3 lows. SPY opened last week with a move below 464 and traded below 457 before bouncing back up to test the 473 range on Wednesday. And then we did see SPY trade back down below the open of the week to close at 464.72. Our analysis for last week on the indexes still remains the same as they have traded in a volatile manner, but still within our bottom bearish support level and our breakout bullish ranges. This leads me to our first trade of the week that I'll be reviewing this week. In our last week's trade review, we did state that if SPY moves below 464 last week, we could see it move to 452. And for the bearish reversal, we did state that we wanted to see SPY trade above 468.50 and then to see a 469 break for an uptrend. We did see SPY break the 469 area but moved into 473 where it got rejected, and by Wednesday we did see SPY start to trade back down, closing the week at 464.72. We still remain within our analysis from last week based on the bearish continuation and the bearish reversal, since SPY is trading within that range. IWM, we did state that we wanted to see IWM move above the 217 to the 219.50 range to move into a bullish trend. IWM traded into this range and then traded back down just as SPY traded back down. Same thing with QQQ. So we will still keep this index outlook going into this coming week or this short MLK week for all the indexes we're covering. That will bring me into the first trade review of the week. Last week, before the last week's trade review, we had a system alert for SPY. SPY was alerted with a strangle strategy on Friday, January the 7th. The alert was for 468 call and a 466 put, and for Monday expiration. We expected SPY to swing above or below our strike prices, and whichever leg went into the money will give us enough profit to make the old leg profitable while offsetting the loss of the losing leg. Most of our members got into the spread between $2.80 and $3.15. As the market opened on Monday and SPY tanked below 457, the spread was trading over $9 for over a 200% plus profit. For our seasoned members who are very familiar with our strangle split leg exit approach, they were able to get over $10 for the spread by exiting the spread leg by leg. This is an approach we practice with our strangle and straddle strategy in order to be able to get the most out of the spread by actually timing the bounce either up or down, whichever way it goes. So in this case, when SPY opened and traded below 457, members were able to exit the puts first, waited for a quick bounce in SPY to be able to exit the calls. Even though if the calls had gone in worthless, they would have still made way more money that covered. By exiting the puts first, you've already made enough money that covered the totality of the spread with enough profits on it. In most cases, in this case, most people that exited the puts first were already up on the trade over 150%, and they were just waiting for a bounce on the call leg to exit it for a little bit more money. And in that case, depending on the approach, you can use stop limits, trailing stop losses on either leg in which you keep to see if you could get more profit on it. This was similar for the trades we actually released on the IWM and QQQ as well. So for similar trade alerts on our indexes, do urge you to sign up for our DRAT options alert so you can get alerts that are similar to this, and you can also take part in this kind of market volatility trades. The second trade in which I'll be covering today is DKNG. The DKNG spread strangled alert was released on our systems on the first trading week of the year. So the alert was released with a $29 call and a $27 put, with a January 14th, which was last week Friday's expiration. That entry price between $1.80 and $1.95 with a target of a 60% profit and a stop loss at $1.58. At the time the alert was released, it was trading at $1.99. So most people would have gotten it into this between way below $1.95 because the alert traded below $1.95. So all our alerts are released on all our mediums. So you can get all our alerts via email, via Discord server, or via web app. The web app is very useful because for people who have the smart trader, you can automatically trade the alerts from the web application. So in this case, if you had gotten the alert and you had access to the web application and the smart trader feature, all you had to do was click trade. And by clicking trade, a smart ticket will appear here, auto filling out the trades for you, and all you had to do was select the ranges in which you want to buy this trade, and you can also adjust your targets. Normally you to fill out the target based on the target that is on the trade alert, and also with a stop loss. We also have a feature called the trailing profit. The trailing profit allows you to keep your profit. And also with the way the trailing profit works, kind of similar to the trading stop loss, but with the smart trader trailing profit, the market makers and the market do not see your stop loss triggers until your stop loss limits have been met, which means the smart trader is not going to put your trades up for sale until the stop loss has actually been met before he puts it up for sale. And how is that important? In most cases, if you put out your stop loss, the market can take out your stop loss by understanding where the stop losses are. The only way the market takes out your stop loss in this case is actually if your stop loss is actually hit generically without your trades being actually available there. And the way the trailing profit works is it works in percentages. So for example, if I set a 20% trailing profit, what would happen is if the trade moves 20% above where I bought it from, the system will automatically adjust my stop loss by 20% by moving my stop loss up by 20%. So as the trade moves up, my trading profit will move up with the trade. So in a case whereby the trade turns against you and comes down, you don't lose all your value of the trade. At least you get out the trade with some sort of profit. So this is a good feature in which you can use with equity and options trading. And we do have it on our Smart Trader application. And also with the Smart Trader application, all you had to decide was how many contracts you want to buy. And you can select how many contracts to buy within your set buy ranges and your set targets for sale. Also, you can also tell it to cancel if not filled by a certain time and date. You can tell it to automatically simply cancel the whole order. So these are the advantages of using the Smart Trader. Also, I would show you the same trade from our Discord server. For those of you that are familiar with the Discord and why we use the Discord server application as well. So looking to the left of the screen, you can see the trade for the same DKNG on our Discord server. So you can see they were released at the same time. All our systems are in sync. The emails, the Discord server, the web applications, they're all in sync. So all the alerts come out at the same time. So the trade alerts came out, as you can see, at the same time here, the same date. So the same alert with the same concept on it. Nothing changes. And you can see, as I was saying earlier, that the trade traded into the buy ranges, allowing you to buy it. So the buy range was $1.80 to $1.95, and you can see looking at our Discord server. So what our Discord server does is it also shows how the trade is moving from the time the alert was released. So the alert was released here on this date, and then the spread traded into $1.82, which was 5% below the alert price. And on our Discord server, it also notifies you when stuff like that happens. So you get a notification saying that the trade alert had gone 5% from the alert price, minus 5% from the alert price, which basically you get an alert saying that the trade has moved into the buy range. And as you can see, our system tracks the trade as it goes up or goes down. So on the next day, the trade was up about 5%, and you can see the system tracks it 10%, 15%, 20%, 25%, 30%, 40%. So it keeps tracking it as the trade moves up into the target. And as you can see, the trade did move into the target 2 days later, going as high as $3.30 for you to be able to hit your target. So if you were within the target's range, you would have exited, or if you had a trailing profit, you would have exited this trade for a profit. So these are one of the advantages of our system, as we'd like to keep efficiency, so we want the users to actually be able to see how the trades move. This is also available on our web server. We do not offer the triggers on the email. The only way you can get the triggers on the email is actually if you use the tracking feature on the web server. So on the web server, if you have your trackers email notification set, you can go in there and click on track. So if you click on track, it adds the trade to your trackers. It will send you emails as the trade progresses, either up or down, into the stop loss or into the target. So these are one of the advantages of using the Nostradamus web application. It gives you a lot of tools at your disposal. At least it puts the trade right within your view. You can make easy decisions without having to really get confused. This is one of the advantages of using the strangle strategies. Our strangle strategy has always proved profitable, regardless of if the market moves up or it moves down, especially in a volatile market. We like to actually utilize this strategy and the straddles as well in order to make sure that most of our trades end up being profitable. Going back to the SPY trade, and just to show you how all our trade alerts are actually synced across all our system. On the SPY trade, you can see this same SPY trade was released on our Discord server same day. You can see once the trade alert was released, it actually traded into the buy range, which was kind of below where the trade was released, 5% below where the trade was released. This is a track record which we show up on our Discord server, and you can see on Monday, as I was saying, as SPY traded, the spread actually opened at about 15% in profit. From there, as SPY traded down, we just started to see profit in the spread, which the put side was gaining a lot of money. And as you can see, this was trackers tracking the trade up until we were up over 200%. So you can see how our system actually works. There's nothing hidden. We're very open. We track all our trades. We just don't give you an alert and then show up maybe a week later and say the alert we gave you produced this money. No, you can actually see it yourself. You can see the progress yourself by following our system. To conclude our options trade review, we have a recurring track record, which we do for all our trade alerts section. It helps us track our performance for all our alerts and tells us when we need to make adjustments to any of the strategies to allow for more efficiency and profitability for our members. This is the performance of our options alert. As you can see, our win rate is scheduled over here versus our loss rate. So each is all the alerts that our system has released, when the alerts were released, when the exits were made, the amount of profit each of the trade alerts did make, or each of the alerts make. So here you can track all our system performances, and it also helps our users to determine what types of trades they're going to take, how they're going to trade it, just depending on how they read the statistics of this. But we do have a good winning rate. We try and keep it above a 75% win rate. This is not always guaranteed, but we've been able to do this for the last about 3-4 years now. So if you trade stocks, you can also watch our Smart Trader and our web app videos on how to use the Smart Trader to trade stocks with Nostradamus. We also do have stocks alerts in small caps, large caps, and we do also have long-term alerts we use to compete with the S&P 500 for people with larger portfolios. We basically pick the S&P 500 into pieces by taking special trades from individual stocks in the S&P 500 and try to beat the S&P 500 within a year period. Those are one of the things that we provide our members with. For more information about the videos or our training packages, please email us at support@dalstradamus.com and we would reply you in a timely manner. To sign up for our trade alert and the Smart Trader, please visit our website at dalstradamus.com. For more information on any of our services or our trade alert systems, please email us at support@dalstradamus.com or contact us via any of our mediums. You can also use our live chats on our webpage to contact us and we'll reply you in a timely manner. Thank you for watching this video and have a wonderful trading week ahead.